Hello, everyone, and welcome back to Wilson Weekly. Today, as always, we have the star of the show, Doc Wilson, who will be providing us with some exciting updates. So, Doc, take it away. What do you have for us this week?
Yeah, good day, Yasmin. And how are you this week? We've got another really I didn't let you answer then, but let me answer that. You're good?
I'm
Yeah,
great.
that's excellent. Of course, this is our pre-Easter extravaganza. No Easter eggs yet. Of course, we have to wait till Sunday for all that chocoholic enjoyment. But and I can hardly wait. But it is another interesting week, of course, in the housing market, and that's what we do here every week. My brand is My Housing Market. We operate as independent commentators and data providers, focusing on what's happening in the housing market. Of course, we bring this in conjunction to all you folks out there, in conjunction with our good friends at Infinity. And it is all about providing you with the latest insights and information in regard to what's happening in the housing market. So it is all about informing those that are about to make decisions in regard to property, or those that are just generally interested in what's happening in the property market. And that's probably just about everybody, isn't it, over the age of about 10 in this country. But it is all specifically about the current state, really. We try to look at what's happening here and now in the housing market. This is a clickbait-free zone, so all that you get here is evidence-based. So no silly headlines. We've had a lot of those in the last couple of weeks, particularly in regard to what's coming out of the US with those tariff shenanigans that the Trump administration have been playing with. We're going to do something a little bit interesting today, Yasmin. We're going to have a look at just how the share market has performed over the last couple of weeks. We do like to, from time to time, produce comparisons between asset classes being property and asset classes being equities, that is the share market. And again, we're sort of seeing that volatility that can happen to share investors, which is in contrast to, of course, what happens in the housing market. But they are completely different asset classes, of course, and they certainly provide, I guess, different outcomes and different agendas for investors. But it was, I guess, a little bit sobering just to see the roller coaster ride in the share market following the announcement of those tariff policies out of the US. It was a pretty serious scare campaign that underwent, despite the fact that nothing had actually happened. But we did see a big shakeout in shares, not just in the US, but in Australia, and really haven't recovered yet. And I think that's, a bit of a timely warning in terms of those that do respond to these sort of gloom and doom headlines that we tend to get more of these days. In fact, it reminded me a little bit of what we went through in COVID. And of course, COVID was a very serious circumstance, the pandemic. But this was a little bit like perhaps the media are looking for something else to scare the pants off us. And they did it to some degree for those in the share market. So we'll have a quick look at that. Don't want to go too far into that. I'm a little bit obsessive by me. But we do every week bring you the latest, or every week we bring you the latest insights into the housing market, not just the hard data such as prices and rents, but also the key drivers of the housing market, which focus on such things as the state of the economy and, of course, what's happening with interest rates. And we do have an interest rate decision coming up soon. The jungle drums are beating pretty loud again that we might get another cut early in May. Let's see what happens. And as we discussed last week, some of those key drivers are looking like they are supporting perhaps a decision to cut rates again by the Reserve Bank. And that's good news for the housing market, because as we've seen with our latest data, the March data, that prices are rising again. So a little bit in contrast to what's happening with the shares that are falling. House prices are rising, and no surprise given the impetus of lower interest rates, which always typically mean higher prices. So let's get started, Yasmin. Enough of my prelude, which goes on and on and on, as usual. So it is the week ending Wednesday, April the 16th. We're now right on the edge of the Easter break, and this is going to be a bit of a break coming up, because after Easter comes Anzac Day. So really the best part of 3 weeks in holiday mode. And so it means some of our markets take a bit of a holiday. We'll see that with our latest auction results that we'll show you this week. And of course, there'll be less activity, significantly less activity, with fewer homes put up for auction over the next couple of weeks. But we'll wait to review that at the end of the show. So this week we're going to look at the latest home building approvals, February home building approvals. Some interesting trends are now emerging with new building. We are in the middle of an election campaign, and I forgot to mention that's what comes after Anzac Day comes the election. So it's all happening in terms of diversions over April and into May. And part of the conversation in terms of the election policies has been, high house prices, high rents, and are we building enough property and as we have enough, housing? And as we discuss and have for a long time here, that we're not. And are we seeing signs of a revival? Well, sort of yes and no, but certainly we're not building anywhere near as many houses as the government expected or hoped that we would build. And I guess that's an ongoing problem, not just for our national government, but also from our state governments. And we'll have a look at what the latest data says. We'll also look at the February retail sales. Retail sales are a good forward indicator of how consumers are feeling. We haven't looked at this data set for a month or so. So let's have a look at retail sales. They're probably a bit more reliable than methods such as consumer sentiment surveys, which tend to be always a bit negative. And this is hard data, which shows you exactly what retail sales are doing. So it's not just an opinion, which people provide in polling outcomes. So let's have a look at the latest retail sales. And as I quickly mentioned, the latest share market data, let's just have a look at the shenanigans that have been happening in the share market over the last few weeks as a result of the introduction of those tariff policies from the US. And as usual, we'll look at the latest weekly auction results. Last Saturday was Super Saturday, as we've called it. I think I actually invented that term years ago. Super Saturday of auctions, which is usually one of the biggest days for auction activity in the year. And that's because it is the last, cough button, the last weekend before the Easter break. So we do get a front end loading of activity to avoid the distractions of those Easter holidays. So home building approvals fell. They didn't really fall. They were sort of flat over the month of February, down by just 0.1%. And that followed a big rise over January, 5.9% rise. As we always say when we discuss building approvals here, they are a volatile data set, and that's because we can get big numbers of apartments coming through on a monthly basis, which isn't followed up the following month. So it can go a little bit up and down like a roller coaster, reflecting those big developments that can come through. But units were down 1.5%, houses up 1%. So it was a fairly flat month, Yasmin, for building approvals, for home building approvals over February. Victoria was the top state for building approvals, up by 36.4%. But that big rise did reflect a significant approval for apartments, an apartment development that came through in February. Now, annual growth levels, longer-term levels certainly remain depressed, but the quarterly trend in terms of some positive news is now starting to rise. So let's have a look at the data. As I mentioned, the month was reasonably flat, with houses up 1%, units down 1.5%, and overall dwelling approvals up down by just 0.1%. But this is the big news, Yasmin, when we look at we start to look at the longer term or the longer term trends. The year to date, which of course covers just January and February, when we look at the year to date this year versus last year, we could see a massive rise in unit approvals, up by 55.8%. So we're obviously seeing state governments now really expediting approvals for units. And this is the new trend in new home development, is that we're seeing a surge and not just that monthly sort of volatile outcomes, which we're used to, but we're seeing more of a longer term growth profile for unit development. So units are really on the march. Houses also up 6.9%. The longer term trend for houses is a little bit flatter, however, and over the full year, that's the year ending February 2025 versus the year ending February 2024, we have units up 6.9%, houses up 8.7%, and overall housing up 8%. So some better news. We're certainly on the rise in terms of building approvals. That's good. We need more housing. We need to have more choices for buyers and tenants in our marketplace. We're still chronically undersupplied. We're not alone there. Most advanced economies are having the same problems in terms of building enough homes for their populations, and they're under some political pressure because of that, because, you know, the electorate doesn't like high rents and difficulty in securing housing, and governments have been paying a price for that. Will our government pay a price? We'll see in a couple of weeks' time. But certainly we're seeing a revival in unit development, and I think that's because state governments have had a fire put under them in terms of expediting some of those planning approvals, particularly in inner suburban areas. And we're seeing a strong growth in higher density development. So this is the long-term trend. You can see just starting to rise now. And when we look at this, these are private sector houses, of course, seasonally adjusted. When we see the numbers for February, we can see they're actually significantly higher than where they were over February last year. And as I mentioned before, that's because of a big lift in unit development. But with the trend certainly now rising now, it's still below where it was at its peak levels. And we'll look at that in a bit more depth shortly. When we break it down into units and houses, you can see the big difference there. The trend for houses is actually starting to fall now. So new house approvals are now starting to wane in terms of the trend, whereas units, you can see units, that's the darker series there, are certainly on the rise. And look how higher units are over February this year compared to February last year. Just over 4,000 a year ago, just over 7,000 approvals this year. So again, reinforcing, and you can see it quite clearly on the charts there, just that revival now coming out of units, but it's coming at the time when houses are starting to wane. So, you know, it's one rising and one falling. When we look at the state breakdowns, the capital city breakdowns, as usual, Melbourne is the engine room for new home development, well ahead of total homes approved over the 2 months this year, over 8,000 homes approved. Interesting that Perth is still very strong, smaller capital city, of course, but Perth is now providing the third highest number of approvals for homes, behind Sydney and Melbourne. So, and Sydney units have really climbed. It's been one of the main factors that we've seen climb, because Sydney units were underperforming a year ago, but now on the rise. So again, Sydney and Melbourne are leading the charge in terms of unit development, but the other capital cities are not far behind in terms of their relative position of improvement. And we look at the growth over the past year in units, particularly evident there that Melbourne unit approvals have grown by 107%, Sydney up 63%, Brisbane up 35%. Smaller unit markets in Adelaide and Perth, so they tend to have higher differentials when you do compare them period to period. But there's no doubt the big markets of Sydney, Melbourne and Brisbane are approving a lot more units than they did a year ago. So good news there for more choices for buyers and going forward. But the house, it's interesting that what's happening in houses now is certainly moving the other way. So interesting there in terms of the comparisons. So this is the long-term trend for home building for the capital cities. You can see that rising now. This is total dwellings. These are for capital cities. This is the annual trend taken month by month. Still down 31.5% compared to the peak back in 2016, but clearly now on the rise, as you can see with the latest trend there tracking. But some way to go before we match what we need and before getting anywhere near the targets that have been set by the government and the forecasts made by industry groups such as the HIA. When we break it down, we can see quite clearly there the lighter background is units are starting to rise, but unit building approval trends are still down by 51.5% compared to their peaks in 2016. And as we saw, these are capital cities, as we saw with the national result trend, we're starting to see a leveling off of house buildings, of house building approvals. So, yeah, units on the rise, houses are now leveling off. So some interesting divergence there, but some better news, although still well below where we need to be in terms of new dwelling approvals. So let's have a look at these February retail sales. Good sign of how our economy is performing. February retail sales up by 0.2% over the month and up by a very robust 3.6% over the year. So these are seasonally adjusted. It follows a 0.3% rise over January. And even though this is the value of retail sales, and that is exaggerated a little bit when we look at the value of retail sales because of inflation, because it doesn't account for inflation. And we know we've had, until recently, higher inflation. So that sort of means that you're paying more anyway because prices are rising. And also migration. We had a surge in migration. So that means there's actually more people coming into the country buying things. So that sort of puts upward pressure on the data when we're comparing it from period to period. But nonetheless, these are very strong results still, well ahead of where we were in the pre-COVID period. And the point that we should recognise is that obviously lower interest rates, we've already had one cut. Will we get another cut in May? Maybe starting to get more possibility that will occur, a higher possibility that will occur. That will fuel retail spending because of lower interest rates means that people have got more money in their pockets. And what do they do with that? They go out and spend it on retail. Well, I do anyway. So, and that will only be a positive for economic performance, because if you're spending more, then those that are selling the goods are making more. So, well, that's the theory, and that all works to getting more people employed, and that all works to having continuing strong economy, which we have now. And of course, these retail sales reflect on the ground level positive consumer sentiment, because why would people be spending more if they didn't feel good about the way things are? So some good data there. We can see the chart there still tracking well ahead of where it was in the pre-COVID period. And when we look at the annual growth rates, they're still tracking at that 3% plus mark. So that's the change in retail sales on a year-by-year basis from month to month. And that gives us a good sense of the underlying performance of retail sales. And as I said, this is a really good measure for consumer confidence, so we can take that as a positive from the perspective of how the economy is performing. And as I said, another interest rate cut will only refuel or continue to support what are very robust retail sales data. So, okay, we're going to have a bit of a crack at the share market now. Yeah, all my friends in the share market, yeah, they don't like me doing this, but I do it because, whatever. And it does, again, reflect the volatility of share investment. So the share market was down sharply because of that scare campaign in regard to the tariff policies that have been announced by the US. Nothing had actually happened. In fact, it was only like 2 days after the announcement that we saw all this doom and gloom being presented as likely outcomes. Of course, it was all speculation. It wasn't based on any data that had come through because nothing had happened. And of course, as we discussed last week, there was always the likelihood that things would change in the short term. And guess what? They did change in the short term. There was an announcement the tariff policy would be put on hold, and now we've got an announcement that there's going to be some goods and services that are going to be exempted from tariffs, the US tariffs, particularly telecommunications and electronics. So, and of course, that changes everything as well. But it didn't stop the share market from falling in a hole. And again, this is where we're exposed through the share market, that people look at these outcomes, a crash in the share market, and they start worrying about what this means big time. People start sitting on their hands in terms of spending decisions, hiring and firing decisions. And it has can have a self-perpetuating effect. But the reality was it was based on nothing more than scary clickbait headlines. And we saw that because as soon as the policy, as soon as the fuel that was which was supporting the doom and gloom stop, that is the change in the policies, then the share market bounced back. So despite that, we still have a strong labour market. We have rising house and unit prices, rising retail sales, as we've just seen. Rental markets are tightening again with higher rents. We've got sharply lower inflation and lower interest rates, and yet we had that shakeout in the share market. And there it is. And you can see there, Yasmin, just how we fell away following that announcement by the US. Australia has a net positive relationship, with the US in terms of its trade balance. So it really doesn't affect us as much as, say, China, Canada, or Mexico, that the US has a big trade deficit with those countries. So, and we've said that we're not going to retaliate, if we get higher tariffs. It was all just, again, a ridiculous scare campaign. I feel sorry for those that sold shares, and we still haven't recovered back to where we were in early February. In fact, even though we've had some recovery in the share market, we're still nearly 10% lower from the peak this year, back in February. So moving on, as usual, we will look at the latest weekly auction results. It is the last major week for auction activity before the Easter break, before the Anzac Day break, and before the election. So, and because of that, as I mentioned before, we had what's called a Super Saturday of auction activity last weekend. Big numbers of auctions tested the market, but the market sort of came through pretty well, particularly the markets that have been performing well this year, and that's clearly Melbourne and Sydney, that are continuing to track ahead of where they finished last year and also ahead of where they were a year ago. So good news there for the Melbourne and Sydney markets in terms of auction activity. And even though there was a surge of auctions in those capitals, clearance rates were just about the same. So given all that extra supply, given all those extra choices for buyers, given all that extra competition for sellers, clearance rates actually remained the same. So that was, revealing some resilience in our auction markets. So, of course, as I mentioned, the auction markets will be quieter over the next month, which reflects the Easter Anzac Day holiday break and the election campaign that will follow soon after. So let's have a look at the numbers. Sydney had 1,185 auctions, up from 991. Clearance rate down just a smidgen, 69.6%. Similar to the same weekend last year, which wasn't the Super Saturday of auctions because Easter was earlier last year, for those that have forgotten. Similarly, Melbourne, big auction numbers, 1,360 auctions conducted in Melbourne, well up from the week before, 1,191. Clearance rate similar to Sydney, just down a little bit compared to the previous week. But again, that Melbourne clearance rate is higher than where it was a year ago. That's what we've seen consistently in Melbourne so far this year, which is some good early signs that Melbourne market is on the way back following a lengthy period of subdued activity. Brisbane auction numbers down, clearance rate up. Similar, Adelaide auction numbers up, clearance rate down. And Canberra still yet to really break free, that Canberra market, from what has also been a relatively subdued period there over the last year or so. So let's have a look at the longer term trends. The Sydney market, nice start to the year. Still tracking over 70% for all the months this year so far, and the same as where it was a year ago. So no surprise, Yasmin, we are seeing prices rising in that Sydney market, giving consistently solid clearance rates going forward. As I said, they're tracking well ahead now where they finished last year, and similar to the beginning of last year, which was a strong period in the Sydney market. So watch out, and we will watch out very carefully for the results over April. And our early tracking shows that growth in house and unit prices in Sydney is continuing. And we shouldn't be surprised at that, given these clearance rates. As we know, we look at clearance rates every week because they do provide us with a reliable forward indicator of what's happening generally in the housing market. So that's the Sydney trend. The Melbourne trend, same sort of a deal there, tracking higher than a year ago in Melbourne and well above where it was at the end of last year. So again, reflects what's been a revival in prices in Melbourne. Still some way to go to catch with Sydney's the strength of Sydney, but clearly these signs are positive for a revival in the Melbourne housing market. And let's remember, we've really only had the effect of that single interest rate cut over the past few weeks. So still some way to go before we get the full effect of the interest rate cut in terms of confidence and improved affordability. Brisbane, tracking where we usually expect Brisbane to track. It has a different attitude towards the auction marketing outcomes compared to the big capitals such as Melbourne and Sydney. Well below where they were a year ago, but Brisbane was going gangbusters a year ago. We saw record auction clearance rates. Growth is still coming through in Brisbane, but its clearance rate activity is what I'd call more of a normalised result for that Brisbane market. Adelaide is certainly lower than where it was a year ago, which was a very strong period for the Adelaide market. In fact, Adelaide was the strongest market in the country for prices growth a year ago. So its clearance rates have just tacked back to a more of a normal result, I guess, for that market, but certainly lower than a year ago. And Canberra continues to tease us. We need to see some consistency above 60% for clearance rates and hopefully above 65% in Canberra to start looking for prices growth in that market, but still not there consistently and still a bit lower than where it was a year ago. So still, I guess, sliding sideways, we could say, that Canberra market going forward. If you're looking for the latest weekend auction results, you can get onto my LinkedIn site, which is Doc Andrew Wilson at LinkedIn. Every Saturday night around about 6 o'clock, we send through the Capital City Snapshot, which you saw just before. And then on Sundays, around about 9 o'clock, we release the full national auction report for the week, which includes the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer over the week. So look out for that one. As I mentioned, it's a very good forward indicator, Yasmin, for what's happening generally in the housing market. So if you've missed out on the latest weekly auction market report, there is a QR code. If you've got the scan in front of you, if you've got the slide in front of you, you can scan that and we'll give you a PDF copy of the latest weekly auction result from my housing market. Now we're going to finish off with this fantastic giveaway we have for all our viewers and listeners, and that is viewers. That is the My Housing Market Suburb app, which is a fantastic way of looking at what's happening on the ground in terms of suburb level market information. So this is the My Housing Market Suburb Data app brought to you in conjunction with Infinity. It is a unique and fantastic part of can be part of the decision-making toolkit if you are in the housing market or just interested to know what's happening in your suburb. So there's a scan for that particular app. I'll just alert you, you need to get a password for this because, it's very useful information. It's gold, but you need a password, and the good folks at Infinity will provide you with that password, but you will be glad you got it when you get it because it does give you the breakdown of what's happening in terms of asking prices and asking rents in every suburb in Australia that has data. Of course, it doesn't have any data, it's not there. But if it does, it's there. So this is a screenshot of the app. You can filter it for price or rent. You can filter it for either the capital city region or the outside capital city region. We filtered this for New South Wales, Sydney region, capital city region. We're looking at Blacktown. You can filter it for house, unit or townhouse. So you can choose the type of property you want to examine. Also, you can filter for the number of beds. That's fantastic. And here we've got the results for Blacktown. And it's not just the median asking price. So it's telling you what sellers are asking for their properties at the moment, what agents feel their properties are worth at the moment. And it's not like a backward-looking, sales report. And it covers the whole market, of course. So it's not just the median price, it's the high and the low. So you know the boundaries between what the lowest asking price is in the suburb and what the highest asking price is in the suburb, and in this case, for a 5-bedroom house. And it also tells you the number of properties that are for sale currently, and there's 14 there. And we have exactly the same outcome for the rental market. So if you're interested in what rents are doing, also the nature of that rental market on a suburb basis, you can do the same thing there. And we've used Blacktown as our example. So what a great little app that is. Gee whiz, and they say you get nothing for nothing these days. Well, this is fabulous. So get hold of that one, and there's more, and it's not steak knives, but it is more. And what we have here is just for investors. if you want to find out where the top suburbs are in each of those regions, either the capital city region or the outside capital city region, we can show you where the top 10 yields are. So yield is the return on investment. So this looks at the annual rental value versus the annual asking price. So this gives you the return, the annual return on your investment. So these are the top 10. So we actually tell you in ranked order the top 10 yields for each of those. So this is for Sydney. And again, you can filter it for units and for units, houses, townhouses, and the number of bedrooms. So this is for 1-bedroom units. This gives you the yields in order. So this is good insights for investors looking to make decisions on places to invest or compare what they're getting for their property with what's happening in the marketplace. It also shows you the vacancy rate. So it tells you the vacancy rate for that suburb and also the number of properties for rent and the number of properties currently for sale. So, hey, if you want to take a scientific approach to analysis of the housing market, this is all the data probably you'll ever need. So have fun with that. Put it all together. And as I said, we provide that here just with our connection through Infinity. So it is quite unique and quite a lot of value in terms of insights into the housing market. And we update that in real time. So it's all the latest information. Next week, we're going to look at the March labour market data, which comes out this week. We had a little bit of a weakening in the labour market last month. We saw a fall in jobs and a rise in the number of unemployed. We've had a very strong labour market for quite a long time now. Is this the first sign that something may be happening? If it is, actually, it might encourage the Reserve Bank even more to cut interest rates if there is some sign of weakening in the labour market. So let's have a close look at that. That will be interesting. And as I said, it's an important data set going forward for the Reserve Bank's decision on interest rates. We'll also look, as we usually do in the mid-month, at the March regional house prices. Where are the top performing regions in each of the states for house prices? Always some interesting results there. And as usual, the latest weekly auction results. There won't be as many auctions as I discussed, Yasmin, coming through this week because we'll all be busily anticipating gorging ourselves on Easter eggs. So who needs to buy a house or a unit? Well, I'm just joking. But nonetheless, we are on the cusp of Easter. So it'll be interesting to see how our markets stand up doing that. If you have missed any of the data points in this week's podcast, in this week's report, there is a QR code. You can get a copy of all the slides from this week's report. So good luck with all that. And that's all from My Housing Market and me for this week. Everybody have a fabulous Easter. Take care. And we'll be back as usual, Yasmin, next week.
Amazing. Thank you, Doc. Some very interesting points covered. Looking forward to it. We'll see you next week.
Good on you there. See ya.